Hey everyone, monthly recap video here for January 2021. Record month for many traders out there. Just the action, historic, really, just historic action. The volume's insane, the scales are insane, the percentages are insane. We all know the Wall Street bets and GameStop. We all know about that by now. It's going just mainstream news, getting picked up everywhere. Day trading is just insanity right now, and very lucky and fortunate to be involved in this and have years of experience going into these crazy times. It's all just really paying off and coming together for me. So very good month. So this is what E-Trade shows. With the different losses, the numbers aren't accurate as of right now, but I just want to show this to show, at least some proof. But the exact number, I went ahead and did the math. I started January at 455,000. On January 23rd, it was at 532,000 was the updated profit LY. And for this week, which I have not updated yet, I made 41K. So you got 573 minus the starting of the month, 455, which equals $118,236 for January, which is a record month for me, and that may be hard to beat because I don't know if this madness is going to continue. I'm just going to keep riding the wave and trading safe, trading as safe as I can, while also pushing myself, pushing size, and really going for these really great plays. And hopefully, I would love to break that number, but if that number stands as my record month for a while, I'll be alright with it. I can't expect insanity like this forever. So, we'll see what happens going forward, but just an insane month, and I just wanted to talk about just a couple spots on the top of my head. I'm not going to dive too deep into the month because there's just so much going on, but I want to talk about some big moments, big moments in the month where I really pushed it, really went for it, and see kind of when things didn't quite go as planned. So on OXBR, I noticed that it's a huge forward runner, obviously. So it was at $1 basically, and it peaked at 960 on just this one day massive pump. And then I noticed it had a little perk here. Okay, it went from 2 to 370, and it was consolidating. Okay, so the structure that I was looking at, it's making these kind of higher lows, triangles on the daily, and I thought, hey, if it can break out of this range that's consolidating, it could surge up and retest this 350 high, and if it breaks out of that, who knows how high it could go. If it breaks out of that, it could surge up and test 5s, or maybe even go up to these insanity levels. I don't know. The market's insane, right? But that was the thought process as to why I was watching it so closely in the zone. Okay, so now I'm going to go over my trade on it on the 15th. Okay, so January 15th, let's see the action. Okay, so I noticed it had some action in the morning. I think I played this for a small win. It got weak, it came down, it's just like, it's not going to do it. I'm gonna sell it, I'm going to reevaluate. Now, going into the afternoon, I think VWAP was around this area. Okay, so it was kind of like a VWAP hold play. And then what I noticed, obviously when you're working with a range, okay, like this range held all day, and then you get a perk out of the range, right? So this perk gets my attention. And then what happens, you see, can that perk hold structure? Can it form an appropriate entry that is safe? And the answer was yes. Actually, I started into this play 5,000 shares right here at 235, anticipating it would perk out of this. And then once it held so nicely, I had the conviction to add 5,000 at 240. Okay, so I had 10,000 shares at 238 average. I mean, think about that. 10,000 shares on a play like this, that's a huge size for me. That's me pushing myself to my limit. Okay, this is max size for me. Just really going for it. I just really like that daily structure. I like the past, right? The history of this stock. It's a very low float, 3.6 mil float. Low floats are very hot right now. And I was really going for it, you know. My plan was let this roll, let it hold gains, you know, and swing it. And swing it, go for that big move to $5. Really go for it. I could have made $25,000 if I get the pump to $5, right? That's what I was going for. Now here's when things backfired on me. It peaked at 280, okay? So I was up at the very top. I was up $4,000 on this position. Most of the time, I'm obviously just locking up a nice $3,000 or $4,000 play. I like to lock in profits and those small gains. Small gains, that's actually a big gain. But the idea is those singles add up. I thought this was an appropriate spot to go for a home run. The thing I didn't anticipate was these levels, right? I expected 250 to be able to hold, right? It's like, this is a really hot play. It makes perfect sense on a long-term chart. It'll hold up, right? Well, wrong. It broke the levels that I did not anticipate. You know, I did not anticipate this level breaking again, and all of a sudden, you know, my $4,000 win, it's back at break even, essentially. And all I could really think is, oh my gosh, if this comes down and then has a panic dump to even lower levels, is my win about to become $1,000 loss? It just really affected me mentally. And something that you don't always anticipate when you hold on, you don't anticipate how you're going to emotionally react to the price action when it comes back down on you. And so this is a situation I was not mentally prepared for a pullback this extreme. And I panic cut, you know, I panic cut at a spot that just honestly, I should have just risked like 233, you know. I should have just said, you know what, I took big size. I know I'm really going for it here. But you just got to risk $500 on this and deal with it. But I didn't, you know, I panic sold it at basically the low. You know, the low of the pullback. I sold it at 237 and I took $100 loss on something that I was up $4,000 on. So this, you know, is just one of those spots where I thought it was an appropriate spot to go for a home run, and I got sloppy on the downside because I'm just not used to holding through things like this. And whenever you're doing something new or adjusting your process, you're going to slip up and make mistakes like this occasionally. So, you know, I just wanted to show that kind of a big spot from the month. Now, ideally, I would have just held the risk and held on strong. And then once it pops back up, you know, this is really when I would have been selling it and just being like, you know what, I'm gonna lock up between $1,000 and $2,000 here on the bounce because it broke down so much harder than I imagined. I can't deal with it. So you know, that is what I wish I would have done, right? I don't necessarily mind that I held through this upside. What I am really critiquing myself on is abandoning the proper risk and selling it at a spot that's just not optimal at all. You know, so I cost myself between $1,000 and $2,000 by not just waiting, selling it on this bounce. Okay, so that's really where I screwed up. And then what ended up happening is it did this, okay? So, right, so this is the day I played it. It pulls back, holds, so it's kind of like a false breakdown of the trend, recovers the range, and then pre-market it has a huge pop, which was kind of an indicator to start watching it again for that bigger move on the long-term chart that I was looking for. So, again, kind of going into a flawed mindset because I just felt so defeated Like when I saw this pop in the morning, when I saw it go from 260 to 330, I was just felt so defeated, because I was on the right track, but of course, missing it again, I felt. But so I kind of checked out mentally, and that was a big mistake because look at the structure. Just look at the structure of this. Okay, so it forms a range in the morning. It has kind of like this false breakdown as if it's going to fail. And then look at what happens. It bounces back into the range. And then it forms a really, really great confirmation entry right here at 284. You know, you buy something like 284 risking 273. Okay, I could probably take 2,000 shares on that risk. And then look at what it leads to. It just leads to massive upside. You know, maybe I lock in a $2,000 win. Then maybe I see it consolidate a bit. Okay, and maybe I feel comfortable enough to jump back in this area, take it for another $2,000. You know, I could have easily made 4,000 on this, taking very conservative size, but I just didn't play it at all. And so, you know, it's a big spot. It's a big spot on OXBR when I was on the right track, and I just didn't manage to capitalize on it at all. So I just wanted to point that out. What else? I wanted to go over some momentum plays, actually from yesterday. So Icon, okay? Icon was in a very interesting spot. Very interesting spot. So I actually went ahead, I took 5,000 shares at 189, okay? I sold it at 189 when it didn't get going. Now, why in the world would I buy this right here? Like, what am I doing here? Okay, so you got to look at the structure. Okay, the structure, it's a bullish perk in the morning, and then it's holding a range. Okay, so you got a bullish perk in the morning, it's holding a range, kind of get this bottom area, and then it holds this bottom area. So as it bounces back up to test the top of the range, the thought process is if it can perk out of the range, I will get the move. Now, why did I know that it could have a move? Look at the long-term chart. The long-term chart will always answer your questions, okay? Yeah, the long-term chart range. This is a multi-year washout play. Okay, it's a piece of shit stock that's been washing out for multiple years. And what's the hot trend right now? Trash retail is bouncing. It's apparel manufacturing, consumers, you know, whatever that is. It's just trash. Right? It's trash. It's been washing for years. The hot trend is all these plays are bouncing. Multi-year bounces, okay? So when you get the breakout of this trend and then all of a sudden it's not making downward structures, it's making upward structures. It's like making a stair-stepper pattern on the multi-week, multi-month, and now you're getting a ramp, okay? So this area is essentially like, it's been in the works for months. It's just kind of a slow mover that I couldn't be bothered trading until it starts to ramp. And once the volatility increases and you start to get, you know, price ramping, this is when explosive moves can occur. And that's why I was watching it so closely. I was aware it had a multi-day range. I was aware the volatility was increasing. I was aware of the multi-year. So that's why I went ahead, I tried to time that breakout entry of the multi-day range. I got in at 189, it didn't move, I didn't feel comfortable with it, and I cut it for break even. You know, and I'm alright with it because I didn't want to risk, you know, $500 on something like this when I knew I could get out break even, because once it doesn't break out and it starts to break down, it could have easily just dumped. I mean, this is super liquid. There's no reason why this couldn't just panic dump down to the 170 level perhaps. And why would I want to risk $1,000 on a panic dump when I can just get out break even and reevaluate, right? So that's kind of the thought process behind why I cut it there. Now what happened is, late in the afternoon, it had held the structure, and actually Icon I kind of stopped watching it. I just thought it wasn't going to do anything. But that structure held in the late afternoon, and it tried again, and this time it perked out of the new high of day breakout, and it started to really go. It started to have that breakout on the long-term chart. Now, when I see this, I see a perk on my new high of day scan. I pull it up, like, okay, well, it's doing it, it's achieving it. Let me see if I can time an entry. And I see something like this, some pretty good structure. I actually get in late because there was just so much going on. It's kind of hard to know which ones are going to be great or not, and I'm trying to juggle like 10 plays at once. So anyways, I get in 3,000 shares at 217, and I'm just going to risk this 210 area. It holds up for me, and yeah, it just starts to go. And I sell it at 285. I sell it in here thinking that well, this is a good spot to sell it, right? It's like a $2,000 win. Is it? 17? No, 6. It's more like an $1,800 win. And after I sell it, it holds this level, and it just explodes over 3, and it peaks at 420. So I left actually quite a bit of profit on the table on this. But here's the next thing I want to talk about. You go to the profile tab, like I said, it's apparel manufacturing. So then you think to yourself, hey, what other stocks are in this sector that have been kind of forming ranges, and they might bounce too? Any come to my mind? Yeah, KBSF. KBSF is in the same sector. Look at the multi-day. You get a first perk. Right, I was aware of this first perk from a couple days ago. It pulls back, okay, but it holds a dip. I saw it had a morning perk, right? Look at the morning perk and look at the structure. I can't stress it enough. Who cares about volume? Who cares? It has perfect structure on the intraday. It has a multi-day perk setup, and don't even get me started about the multi-month. Look at it. Look at this structure. It's really easy to be aware of this stuff because you see a perk on different days and you pull up the long-term chart. It's just a memory thing. Like, I know KBSF has great structure. It's a former runner. It's definitely capable of having pumps, and everything's bouncing right now. It could have an insane pump. It could continue next week and go even higher. These things can do crazy, crazy stuff, and it's a 1.5 mil float. Fits every hot trend. It's just a no-brainer. Like, for me, it's a no-brainer. I'm gonna go for it. So that's why I found it. That's why I knew about it. When you live and breathe trading and you pull up stocks and you look at them and you look at the sector and you look at the float, and that's how you can react and be so precise and fast when you're already prepared. Okay, so that's why I took my starter, 2,500 shares at 415 as a starter. I didn't know if this level was going to break, and I did not know how thin the bid support was or not, right? If worst case scenario, if it dumps on me, look, I probably could have lost like 30 cents a share. Worst case. I would hope if it started to dump on me, I could have got out around 4. But look, it was pretty risky. I'm not going to sit here and say this wasn't risky. It was very risky. But I had enough factors in my favor that I felt like it was worth a shot. Once that 415 key level breaks and it's ramping up, I instantly took another 2,500 shares because I wanted to help it surge over the new high of day. I didn't know where I would get filled. I just bought it at market, okay, and I got filled at 420. So now you're looking at a 5,000 share position at 417 average. And luckily for me, I get the new high of day breakout and it just starts going. It's just felt really nice, obviously, like, okay, it's actually working, this is cool. Now, it's just one of those things where I know KBSF is the type of stock that pops and it drops. And it's like musical chairs. You don't know when that music's going to stop. You don't know when the momentum's going to stop, and it's just going to come all the way back down. I decided to play this one safe. It's not really a main runner like Icon. It was more like just a sympathy play of Icon. You got to be careful with those sympathy plays because momentum can surge in. It can also surge out just as fast. So, yeah, I decided to play it safe, and I sold my shares in the 540s. So I got out at 544. So what is that? That is 544 minus 417 times 5,000 shares. I made $6,300 on this play. Just an amazing play. Shout out to Bryce. I think Bryce helped me nail this because he brought up the name again, and even though it was on my radar, he helped bring it to my attention again, and I was like, you know what? It makes a lot of sense. And once Icon started ripping, when did the momentum come into Icon? Around 304. It started really exploding around, 307, 308. When did KBSF start running? 315. It gave me 7 minutes to prepare for KBSF and nail it. Okay? So this is sympathy plays. You gotta learn them. They're great, You look at a sector that's exploding, you look at other stocks that haven't started their runs yet, and then you nail them because you are prepared and you have insight because a leader in the sector has already started running. That's how sympathy plays work, okay? Look at XCLB. Same sector. When did it start running? 333. Like, look at this. I had so much time to prepare. Like, after I sold KBSF, this was actually a slip up by me because I was aware of XCLB. I alerted it, to the people I trade with around 310. I was like, you know what? XCLB is in the sector. This could definitely start ramping. Because you look at the long-term chart, look at the development, higher lows for months. Okay, it's got like a perfect breakout setup. It could definitely explode. It's a 3 mil float. It looks great, And this was a huge mistake by me. Okay, I didn't play this. There's just so many plays right now. It's so hard to keep track of everything. Look at the development of this structure. So good. You just start taking the 168, 170. It goes $1 a share. I mean, my God, you can't ask for anything better. $1 a share in 10 minutes? Come on. That's just amazing, right? And the risk on an entry like that? Not much. You enter, you're looking for that surge. If you don't get it, cut it. For a small loss or break even. The point is, people see the plays that I make, like KBSF, for example, and they have no idea what I'm doing, and a lot of people, I've seen a lot of people lately, they assume I'm a pumper, they assume I'm some type of scammer. How do you know to get in, with no volume, and you're just pumping to people and all this stuff, and that's part of the reason why I don't have a chat room or a service like that, because it would be so easy to screenshot something like this, show my entry, show the fact that I alerted it, and then show me dumping on my, alert group. And then they would all call me a scammer, and I see people get called scammers all the time. The wild thing is I don't do any of that. I trade basically alone, and what do you know? My entry worked, I sold it, and I nailed the play. And I don't have a chat room. So you can't really call me a scammer, right? So the point I'm trying to make is these things are going to happen regardless if you alert them to people or not, okay? They happen because they're great structure on multiple time frames. They're in a great sector, the momentum's there, and it's a sympathy play. There's like 5 factors that are amazing that tell you this is a great spot and you need to buy it now. And all those factors are there in your face. And the lazy people ignore the factors. They don't care about the factors. All they see is your entry and your exit, and they go, how'd you do it? And they don't ask themselves, what's the intraday? What's the long-term chart? What's the sector? They don't ask themselves the questions they need to be asking, which is, what are the details that allowed me to have the insight to get involved? That's what you need to ask yourself when you see these plays. Alright, anyways, I'm going to wrap it up there. Just an amazing month. Hopefully we can keep riding this wave of crazy action on the stock market. And yeah, $118,000 month. Let's keep it going. I'll see you guys in the next video.